Hi, Stephen Downey, Head of Lending at OnPoint Financial. I've been joined today by Gavin Holmes, BDM for Scottish Building Society. So Gavin, we get to know a little bit about you.
BDM for the Scottish Building Society. I cover West Lothian, Stirlingshire, Fife, Perth and Dundee. I've been in the industry 16, 17 years, initially with Lloyds Banking Group, Scottish Widows Bank. I was a telephone BDM for a number of years, moved across to BM Solutions. I was a field BDM for the east of Scotland, and as I said latterly, now with the Scottish Building Society.
Yeah, so you guys have been coming up quite a lot in discussions regarding the First Home Fund. So could you tell us, first of all, give us an overview, what is the First Home Fund, how does it work?
Yeah, so the First Home Fund is a Scottish Government initiative that's designed to assist first-time buyers in Scotland. They are offering up to a £25,000 equity loan or a maximum of 49% government share within the property. There's £150 million available for the scheme until March next year. And as I said, they can apply up to a £25,000 loan. It's different from Lift and Help to Buy, and those schemes are still available. Essentially, as long as one of the applicants is a first-time buyer, then they're available for the loan.
And it is only for residential properties, not for anybody who are using it for buy-to-let
or
anything else?
Yeah, exactly. So, as I said, there was a single application, they've got a first-time buyer. If it's a joint application, then as long as one of them is a first-time buyer, the second applicant kind of owned in the past. In fact, if they currently own, as long as the property has concluded missives before the new one, then that's absolutely fine as well.
Which is good, that gives a lot more flexibility than the previous iterations have given us.
Absolutely.
So what is it that's different about the way Scottish Building Society are helping our clients compared to some of the other banks?
Well, there's only a handful of lenders actually participate in the scheme at the moment. So first of all, from our perspective, it gives us the opportunity to beat the table, so to speak. And for a lot of brokers and clients, it's almost a foot in the door for us. Some of the lenders will have limitations in terms of loan to value and loan size, and in particular rates that they'll offer as well. They'll set aside shared equity rates. Yeah. Whereas we've tried to mirror the scheme as closely as we can to the criteria which is in place. And first of all, the client needs to have a minimum of a 5% deposit, for example. Our loan to value is 90%. So essentially, they've got their 5% as they would anyway. Yep. The other 5% can then come from the First Home Fund.
Yeah. So basically, if we're saying if it's a £100,000 purchase, they need to have £5,000 themselves. Yeah. And then they can apply for a minimum of £5,000, which would give them the 10% overall, up to a maximum of £25,000.
Absolutely.
What happens when they want to pay it back?
They'll be paid back on the sale of the property. They do have the opportunity to buy back in 5% tranches over the piece. It's entirely up to them, but it's designed to be paid back on sale, and the £25,000, if they take that amount, will be expressed as a percentage, and it'll be that percentage that the government will get back on the future sale of the property.
Perfect. So an example would be, again, our £100,000 house, they take the full 25, the government has a 25% equity share in the house. They're not charging any interest on the loan as well.
That's right.
And that means if you sell it at 120,000, the government's going to get back 30,000, which will be their 25%
Exactly. So the scheme is open to a lot more, and compared to previous schemes, those schemes are still available, but it's not means tested in the way that, say, Lift would be. Yeah. There is a suitability calculator on the government site, but essentially, as long as it fits the lender's criteria, it opens up the opportunity to the customer to qualify for the First Home Fund.
Perfect. So Gavin, in the previous iterations of some of these schemes, there's been some limitations placed on the properties that the clients could buy. How does this scheme differ?
One of the main attractions to this scheme is the fact that it's available to really all properties, new builds and second-hand properties as well. And as I've mentioned, there's no, it's not means tested in the sense of your income either. So you could earn 15 grand a year, £150,000 a year. If you're a first-time buyer, then the fund is available to you.
And how is it you guys deal with the new build market in particular that might be different from some of the other lenders?
Yeah, so first of all, we consider new build houses and flats up to 90% loan to value. And we also take into consideration new builders' cash incentives. So provided the valuer is aware of these cash incentives and it doesn't affect the valuation at all, then we can take that as part of the deposit. So in essence, the 5% that is required for the first home fund can come from the builder, and the rest could come from the first home fund.
Okay. So again, the builder could provide 5% deposit, first home fund can provide now 25,000, and the client can then be on a much lower loan to value, which is going to give them a better rate with you guys.
Absolutely.
Compared to some of the other lenders that are out there. Perfect. So Gavin, in regarding to the new build, if a client was struggling in particular with getting a loan deposit and the builder was willing to give them a cash incentive, how would you guys treat that?
Well, first of all, the cash incentive, as long as it's not affecting the valuation and the buyer is aware of it, then we'll accept that as part of the deposit. So therefore, if they've only saved up...
so if they've only got 2% say,
yeah, and
the cash incentive is going to make the other 3, then that would work as their overall 5?
Yeah, and then the rest would come from the first home fund. Yeah.
That's really good. Thanks for that. Cool. So, Scottish Building Society have came on quite a lot recently, and we're here to obviously talk about some of your new products and some of the things you're really pushing. What is it that sets Scottish Building Society apart from a lot of the big ones, first of all?
The driving force behind a lot of what we do is the fact that we individually underwrite. We don't have a traditional DIP credit scoring system. So everything we do goes through a lending team, and in particular our head of lending, Andrew Moses, will look at cases on an individual basis. And the cases that you should be able to do with the high street, a lot of times you can't, then it gives you opportunity to get in front of somebody where it's not a computer says no.
Yeah. So if any of the clients have any issues that are explainable, such as there have been family issues that maybe caused some payments to be missed or anything like that,
yeah,
we can look at that a bit more individually with you guys.
Absolutely. So as we don't have a credit scoring system, we use Experian for a credit search. Although we do that on application, it gives you the opportunity to present the case to us. It may be that you've tried to place with a high street previously, and it's failed to score. Now, it not necessarily mean that there's been an issue with their credit. It could just be the lending score isn't high enough or strong enough to pass. That's not going to cause us an issue. It could be that there's been the odd small missed payment. Again, it doesn't cause us too many concerns. And then you've got the issues, or I would call them a life event that's happened, that's caused a particular issue, maybe a default or CCJ. Now there are parameters within that in terms of the scope we're prepared to go to, but essentially we're going to look at the circumstances around that situation. That may be there's been a bereavement or unemployment or a marriage breakdown. Normally the credit's been fine up until that point.
Yeah.
Something's happened, there's been mitigating reasons around it, and then the credit's been fine afterwards. Yeah. And it needs a human being to sit and look at that to understand the bigger picture.
That's good though that you've got that individuality that separates you guys.